What's happening, crypto fam? Happy Tuesday. Good morning and welcome back to Love for Crypto. I'm Scott. It's a pleasure to have you here. I appreciate you taking the time out to consume the content, so thank you. This morning we're back on public versus private sector money, the creation of money, and a paper by Frank Dixon from June 25th, 2021, published in the Cadmus Journal. Basically, he's wrote a paper on private sector money creation, society enhancing monetary reform. Now, the abstract, going to read the abstract, going to read a few paragraphs out of the paper. I advise, if you don't know what private and public money is, like I didn't last week, if you watched the last week's video, watch the IMF video, educate yourself on what private to public money is. It's fascinating. In layman's terms, really quickly, public money is the cash that we hold and what we're paid and pay taxes on, and the cash circulating, wages and shit, salaries. And the private money is your credit cards, the money that's not real. The other 92% of digital money on the system is actually private sector money made by private lenders and that, not necessarily the Bank of England, but they're creating pounds through lending. It's fascinating. So nearly all money in the US, UK and many other countries is created by the private sector through lending. Private sector money creation provides many benefits, but also imposes large costs on society. Transitioning to public sector money creation can provide equal or better inflation control, economic prosperity, credit availability, and monetary value stability. It also can substantially reduce taxes, deficit spending, and national debt, while significantly increasing funds available for essential public investments. High complexity often makes it difficult for citizens to understand monetary systems. Lack of public awareness keeps current systems in place. This paper provides a big picture overview of fiat monetary systems with the goal of facilitating a transition to public sector money creation. The paper is based on a book, Global System Change, a whole system approach to achieving sustainability and real prosperity. The book identifies practical system changes in all areas of society, including money creation. This paper provides several US examples, but the suggested transition to public sector money creation is important and relevant for all countries that allow the private sector to create national fiat currencies. So as I was saying last week, what the hell's public to private money when the private sector makes all the money? The Bank of England's in the private sector, like they're a private company. So anywho, so first paragraph of the introduction: money is one of the most powerful forces in society. It strongly influences people's ability to survive and prosper. In a democracy, citizens, through their agent government, should control the creation, ownership and management of the money supply. But in the US and many other countries, the private sector, banks or other lenders, largely creates, owns and controls it. This degrades society because private sector money creation strongly focuses on the money supply, on benefiting the private sector instead of all citizens. So substantial public investments are needed to maximize the long-term well-being of societies. Essential public investment areas include environmental protection, infrastructure, healthcare, education, retirement, security, and archiving the UN Sustainable Development Goal, or achieving the UN Sustainable Development Goal. That is SDGs. So the Sustainable Development Goals. We have to allow the private sector to create, own, and control the money supply. Greatly reduces the ability to fund crucial public investments. To illustrate, when the private sector owns the money supply, government must often borrow must borrow money from it or encourage the private sector to invest in essential areas. Government borrowing frequently incurs interest charges and increases the national debt. This greatly restricts public investment. The private sector is systemically required to only make profitable investments. If investing in the long-term well-being of society is unprofitable, funds usually are not provided. If citizens through democratic government reclaim their right to create, own and control the money supply, they could provide abundant zero-interest funds for essential public investments. So the private sector is systemically required to only make profitable investments. And if investing in the well-being of society is unprofitable, funds are usually not provided. What thoughts on that? People just think like, shit, I don't even actually know. But I fucking hate, everyone knows at the moment I hate corporation profits. I hate fucking the capitalist fucking bubble. The capitalist bubble. I don't know whether it'll ever pop. But fuck me. I've got nothing against people making a lot of money. I've got nothing against people getting rich. I've got nothing against a guy buying a big boat and fucking off on it. I've got nothing against that. I've got nothing against a woman buying a big boat and fucking off on it. I've got nothing against that. I've got no problems with people being rich, earning a shitload of money and going enjoying it. Got no problems with that. What I've got problems with is people on billion-dollar yachts while there's people starving. I'm bothered about BP, Shell and all the other fucking... I got problems with them motherfuckers making so much profit while they moan at us about advanced climate change. Capitalism's disgusting. It's fucking disgusting. I don't care how anyone wants to sugarcoat it, but it's alright for you living in your Western world. Alright for us. We've got fucking cars and all that shit. Fuck off. Go Somalia, mate. Go Somalia. You want to learn about some fucking hardship? Yeah? It's fucking disgusting that we have so many companies making billions per year while people still fucking starve and haven't even got shelter. We need to stop using the term billion until people fucking get it. Stop saying Elon Musk is worth 180 billions and say it as 180,000 million. Till it starts fucking clicking how big that number actually is. Stop saying BP have made 16 billion. Like it's just one naught above a million. You know what I mean? It's not like going from 10 to fucking 100. Or 100 to 1,000. Or 1,000 to 10,000. No, people act like it is. Fuck that. 16,000 millions in profits. 16,000 million. Now, if you go after, I've said it before, go after employees. If they've got about 64,000 workers. Let's imagine BP has 64,000 workers. Last year, they could have made 16,000 of them millionaires with a profit. Let them fuck off and go and enjoy the life and then hire another 16,000. Over 4 years, all 64,000 employees that were working for them this year would have earned $1 million and fucked off. And they'd get new employees, train them up, bish them up, bash them up, make millionaires. BP could be a millionaire making factory. It literally could. It could make millionaires on tap. On fucking tap. But no, what's it doing instead? It's making fucking billionaires. It's making the board members billionaires. Instead of everyone who's involved in helping millionaires. This paper is massive, guys. I will leave a description. I will leave a link to it in the description. You can download a proper PDF. So I want to go to section 3, operation and transition. 3.1, private sector money creation. So the coins and Federal Reserve notes, paper money, are less than 10% of money supply in the US. As noted, the vast majority of money, or over 90% of money in the US, UK and many other countries, is created by the private sector through lending. The money is created in electronic form. It appears as deposits in bank and other accounts. When the complexity of fractional reserve lending, that's also why it costs you a lot of money to get cash off a credit card, because you're merging the electronic money that's just been created on a fucking computer screen. You're merging that with the physical cash. They're going to sting you some interest on top of that bad boy. Damn right. So when the complexity of fractional reserve lending and other factors are stripped away, the process of private sector money creation is simple. Banks simply declare that new money exists. An equivalent situation might involve a retailer waving a magic wand and making products appear on their shelves. Products cannot be created out of thin air, but money can, because it's not material. It simply is an assertion that new money exists. When people agree that it does, it can be used as a medium exchanged. How fascinating is that? How fascinating is that? Like, oh, there's new money exists today, mate. No, they say, oh, they're just printing it. They're just printing it for the mates. Print me some. Like, yeah, we've got some new money today. Do you accept this new money? Do you acknowledge this new money? Do you acknowledge this new money? New money? Yeah, we got new money. It's yay. What the actual fuck? So vested interests sometimes argue that banks do not create money out of thin air. They say, for example, that loans create assets and liabilities on bank balance sheets. The monetary system is extremely complex, but if one steps back and looks beyond bank financial statements and the big picture, it becomes clear that banks often do create money out of thin air. To illustrate, money exists. It does not magically appear. Someone creates it. Not every loan creates new money out of thin air, but many effectively do. Fractional reserve lending is sometimes used to describe how banks create money, but this adds an unnecessary layer of complexity. To illustrate the process, someone might deposit $1,000 into a bank, a common 10% reserve requirement. The bank is required to hold $100, but it can loan out $900 when it does. It often creates $900 of new money out of thin air. When the $900 is deposited in another bank, it must hold $90, but it can loan out $810. Through this process of depositing and re-lending, the banking system can grow a £1,000 deposit to 10 grand at a 10% reserve requirement, thereby creating £9,000. I've switched from dollars to pounds, I'm sorry. I'm fucking English, don't blame me. £9,000 of new money out of thin air. The confusion arises in the above example because it appears that the bank did not create $900 of new money. It only loaned out part of the £1,000 deposit, but it often is not true. The depositor's account does not say 900 was loaned to another party and is not available. The system still shows £1,000 in the depositor's bank. It can be withdrawn at any time. The bank frequently does not loan out £900 of the money out of thin air. After the loan, it showed the plus 900 in another account. I mean, it's fucking ridiculous, innit? And then, I mean, you got a couple more paragraphs there. You got section 3.2, public sector money creation. Public sector money creation involves government creating money out of thin air simply by declaring that new money exists. The Federal Reserve sometimes creates money with quantitative easing, but the Fed is not part of the US government. It's comprised of 12 regional banks that are completely owned by private banks. The Fed receives no government funding. It employs Its employees are not government employees. The president appoints the Fed's board of governors and chairmen, but once appointed, the government has little ability to influence Fed policies and decisions. Short of changing the Federal Reserve Act that established the Fed is more influenced by its owner banks than citizens' democratic government. In this sense, Fed-created money is closer to private money than public money. Like I was saying last week, have we even got public money? If your government's supposed to make public money, and we know that banks make most, if not all, of the money for governments and people, have we even got any public money? If the people should really be in charge of the public money, have we even got public money? Or is it all just private money? Does it even matter? What's crypto from a corporation that isn't a bank? Is it just a digital asset, but then once it's recognized as new money existing, new asset existing, it's a means of exchange, it becomes money? Does it become private money then? Fascinating, innit? There's a hell of a lot more of that paper to read. I'm going to get my head in most of it tonight. Again, if you haven't checked the IMF video, check the IMF video. And let me know your thoughts on private and public money in the comments. What do you think of it all? What would you do if you was in charge? Would you stop the banks creating money and have a government sector set up where the people vote on what happens with monetary policy? Or would you keep it how it is? Would you give the banks more power? What would you do? Let me know. In the meantime, you know the script. Invest in yourself, your happiness, and the internet of value. Live long and hodl it all. Never let it go. Get it staked. Get it baked. Look after the pot till it looks after you. Wishing health and happiness to you and yours, guys. Enjoy the rest of your week. Yeah, we love crypto. Fucking 8 banks, but we love you. So take care of yourself, and I'll see you on the next one. Peace.